Hello and welcome to another episode of the Forever Cash Life Real Estate Podcast, where we talk about all things having to do with cash flow. In today's episode, we're going to talk about land, but in a different and a mass scale way of buying hundreds of acres, subdividing them, selling them with seller financing, and I'm super excited to dive into that.
Welcome to the Forever Cash Life Real Estate Investing Podcast with your hosts, Jack and Michelle Bosch. Together, let's uncover the secrets to building true wealth through real estate and living a purpose-driven life.
All right, so here we are, and I'm super excited to dive into land flipping in a different way than we do this. And I'm super excited to have our guest today, Doug Smith, sharing with us how he takes hundreds of acres and subdivides them. Hey, Doug, how are you doing?
Great. How you doing, Jack?
Wonderful, wonderful. So just to give everyone a little bit of a background, Doug and I know each other for many years already, and he used to be one of those evil house flippers, right? Not evil, but they're great guys. They just don't know that land is easier, right? So they used to be one of the house flippers, and then I think you took off a year or half a year. You went to Spain, right?
Yes, I lived in Madrid for a year.
Right, and then you came back, and then things changed. So give us a little bit of the history, Doug. Like, give us a little bit about who you are, how you got into land, how you got into real estate, a little bit of your story.
Okay, sounds good. And I'll try to be brief so that we can really get into the meat of the topic and start helping people and maybe provide some tips that they can use to flip more land, right? So
Right.
I'm from Lubbock, Texas, West Texas, grew up on a cotton farm, got a college degree, became a computer programmer for ExxonMobil in Houston, hated that, quit, started flipping houses, realized you can make good money flipping houses, but it's a huge pain in the butt, right? There's so many moving pieces and it's really hard to scale. So around that time, I started myhousedeals.com, which provides a listing of investment properties. And so I spent several years focusing on that. I still had rentals from all my flipping. I kept some, right? And then that went bust and then boom again in the 2008 recession. I built it back up again. It was doing great. I partnered with somebody. They became the president of that company. I moved to Spain for a year, lived in Chile too as well. And somewhere in there, I took off 2011 as well and played disc golf that year. Every now and then I tend to do that. So anyways, while I was in Spain, or before I left for Spain, I started flipping houses in Houston again, but this time I was buying them for cash and selling them on owner financing. And that was going very well. You can do a lot better than the stock market with that, and it's a lot higher rate of return, and it's more stable, right? You're just collecting on those notes every month. And then we experimented, me and my business partner at this point, we experimented with doing this with land, buying a bunch of land, subdividing it, and reselling the land on owner financing. And it took about a year and a half for that deal to go through from start to finish. But afterwards, we ran all the numbers in Excel and realized the margins were enormous, that we had just made a killing because we had sold all this land on owner financing, then we had sold the notes. And just when all the dust settled, it was a lot more profitable than land deals or than house deals. We did go back in and buy a few more houses, but that's only after Hurricane Harvey because we thought we could pick them up for cheap in the flood. That was so-so. But other than that, I've been a land guy ever since. So that was about 4 years ago when I completely switched from houses to land. I still collect on some house notes, some rentals, but it's land. And it's a great game to be in, and it's a shame I just now stumbled upon it.
All right. Well, I mean, we know each other for years before that, but nobody would ever believe me, right? So, so great. So why land?
Well, the margins. There's a few reasons. Like when you get outside of town, you get away from a lot of these smarter, more sophisticated investors, right? I mean, these are bloody red waters here in Houston or any like mid-sized or large city with people that are trying to. They're smart people and they're trying to become financially independent just like you are, and they think the way to do it is houses. So you are just competing against with all these other home buyers. So I wanted to get away from the competition. Now, land as well is beneficial with what we're doing is because we're basically buying wholesale and we're selling retail. We're buying in bulk and we're chopping up and selling it for a lot more, right? For the little slices. Also, what's working out for us is that the change of use when you take something that was maybe for agricultural use and you're switching it over for residential use. Well, now it's valued completely differently, and it's valued at a lot more what you can sell it for, right? Selling on owner financing is great too because, well, most people don't know how to do it, or they're scared of it, so we don't have as many other like competitors trying to sell on owner financing. And then when you do that, you can oftentimes sell as well for maybe 10% more or so than you would if you just sold retail. and you open up to a lot more potential buyers as well. So there's probably some other beneficial things too, but there's just the list of reasons to do land deals as opposed to house deals is very long.
Right. Wonderful. I know. I've been preaching that for now 11 years or 12 years now. So that is fantastic. So let's dive into a couple of things that you just said. So what you guys do is different than what we do. Right? We are known as the land guys. We're known as basically buying properties for 5 to 25 cents on the dollar, or putting one on a contract, doing double closing assignments, transactional funding, whatever you need, or buying them outright, sell them, and not touch them, and just pass them on and make anywhere from 50 to 1,000% returns on these deals. If we sell them with seller financing, the returns can even be higher than that. Right? Mm-hmm. I like to keep my notes because I love the cash flow. What you guys do is slightly different. So you guys go into somewhat outside of bigger cities. Within what distance? About an hour?
About an hour drive, sometimes an hour and a half, but that's really pushing it. If we can do 45 minutes, we will, but that gets more expensive.
Right. So the one thing is, like, the further you go out to the city, it's something I've been explaining forever, is obviously it makes sense. The more rural it gets, the cheaper the land gets. So you guys go out about an hour out, and then you buy how much land?
The smallest deal was 88 acres that we subdivided into 10 acre or 11 acre parcels. The largest was 852 acres.
All right. So let's say you buy, for the simplicity of it, you buy 100 acres, or let's say 200 acres. 200 acres. So you buy 200 acres, and then what you do with them? Walk us through the process of what you do with those.
So we subdivide it. We map it out. We sit down and think about how we can divide this out in a way that would be appealing to potential buyers. And then we start bringing in contractors to put in water wells, gates, culverts, driveways, home sites. I don't know if I mentioned power. And then we're starting to experiment with septic tanks, but very, very minimal improvements that mostly pertain to infrastructure, so that a potential buyer can go in and do whatever they would like with the property. And then we start, I don't know if you have any questions related to that, but then we start marketing the properties.
Right. So let's go into the individual, just on a high level, into some of the individual steps. So, when you buy 200 acres an hour out, it's typically not zoned residential. So you talked about the opportunity of rezoning it to residential. Is that something you need to do out there, or is these mini ranchettes, as you call them, are they also still owned? Are they still so in many counties that I operate in, land in those areas just called vacant land. It's like unzoned or zoned vacant agricultural, and it comes with a lot of rules that you can put in one residential property for every 5 acres on the size of the lot, whatever the size of the lot is, but it needs to be a minimum of like 5 acres or so. You come into those situations that you do that, or you do this?
Well, we try to buy in the surrounding counties, so we're not going to run into any sort of problems like that. But in the state of Texas, if you're subdividing into 10 acres or larger, you don't have to go through the platting process. All you have to do is just bring in a surveyor, and that will cost you a good amount of money because it can be a lot of land. But that surveyor will basically they'll chop up the land for you, and that's about it. When we're selling the land, we put in some restrictions for what the buyer can do. We don't want them to have a bunch of chickens out there, like chicken houses or like a feedlot or something. So we pass along some restrictions, but we're not being confronted with a lot of restrictions ourselves.
Okay,
which upsets some neighbors, but and as a whole, it's working out.
That's good, because that's, again, state by state. You do this mainly in Texas. In Arizona, the laws are somewhat different. You have to go through a more detailed process to get, if you split it into more than 5 units, so into more than 5 properties, you got to go through a much more detailed process. So that's interesting. So when somebody wants to do that, you want to make sure that you do it in the states where you check the regulations of behind subdivisions, and check the regulations between, not just, you're not creating technically a subdivision because it's 10 acre plus lots, but you're creating an assembly of 10 or 11 acre lots, right?
Right. exactly. It's not technically a subdivision. So
Right. So technically, what do you do with roads, for example? I mean, obviously, a 200-acre parcel, an 800-acre parcel doesn't have roads in it yet.
well, we try to buy land with a good amount of road frontage. That's why maybe 95 to 99% of the potential properties that we're looking at don't work. It's because they don't have enough road frontage. Because we
Okay.
want to be able to carve it out to where every little tract that we're going to create, every ranchette has access to a road.
Okay.
So
So you do sometimes that lot behind the lot concept for that, or you do mainly just because if you have one road, but it's um, like
yeah, let me
walk us
show
through
you.
that a little bit.
Well,
You can draw it out,
I'm
just
holding this up, but basically it could look like that. Like maybe there's a road up here and there's a road way down here, and then we're gonna have really long and skinny lots so that each one can have access to the road.
okay.
To
That
one of
makes
those
sense.
roads. Yeah. So I know a lot of people are listening to audio, but it was a horizontal road right up
Right, right,
top and a
right.
horizontal road down low, and they were carving out really thin vertical lots.
Right. That makes sense for that. Okay, that's awesome. So now, what kind of utilities do you put in on those lots before? What kind of like improvements do you make to those lots, and how much do they cost typically?
Yeah, it's a really good question. So for each ranchette, which is usually about 10 acres, we put in about $15,000 worth of improvements. So we'll put in a water well for each ranchette. So,
Okay.
and that will cost about $6,000. It really depends on how deep they have to drill, but it's about 6,000. And we're always working to get that down, like buy them in bulk and so forth. We bring in power, and that's only a few $100s. And
Right.
we've just got somebody that makes that call and coordinates that. And sometimes if we have to bring in power from like a little bit farther away, like one time we had to bring it from a half-mile away, and that costs substantially more, thousands and thousands of dollars. But usually it's not that difficult.
But then once that's right, but you're spreading it also over, in this case, 20 10-acre
Yes,
parcels.
so we can absorb it.
So if you have to paying 20 grand to get utilities in for half a mile or whatever it is, then from there on, it's only a few $100s for each lot, right? Because
Yes.
you need it's the cables and it's the power the pole and the labor, right?
Yes, you're exactly right. And we don't really mind spending the money to do that kind of stuff. We kind of like that, like this business is the way we're doing it is kind of expensive. We kind of like that because it keeps other people out.
Right.
So it's a barrier to entry. So sometimes things
Yeah.
being a little bit more expensive or a little bit more troublesome are actually good for you.
Right. No, absolutely. I mean, there's the beauty of the land flipping world is that nobody even thinks about it, which keeps most people out. But those who actually start looking at it the way we do it, there's no barrier of entry. They can get in very quickly and very easily and do deals fairly quickly. But we are protected in our market by just most people couldn't even conceive it. And even though I've been shouting it from the rooftops, very not that many people have actually gotten started in the land world because I've been shouting it to you for
I
years, the whole
know.
thing.
Well, because
And
it seems on the surface like it's just another category. Like there's multifamily, there's commercial, there's mobile homes, there's self-storage. It just seems like another one of the 10 or 15 different categories, right? Like I guess no one ever slapped me upside the head and told me about the margins. Maybe you should have mentioned the margins. That's
that's all right. I mean, I'm okay with the house flippers not coming over. I'm okay with the average person that runs a business, is sick and tired of running 24 hours in their business, or runs an exhausting job and just says like, "Hey, this is better to come over to us." I don't need all the house flippers come over. We're attracting a lot of the frustrated house flippers that hit their head against the house flipping and started realizing this is too hard to come over to us. And a lot of people who just like, we have dentists, doctors, and all kinds of people, and engineers and bartenders and from all walks of life, but they just want something and they're open-minded to that. But now this
yes.
is yeah.
If I could start over again, I would have gotten directly into what you're doing, what you're teaching, and then I would have either kept doing that on a larger and larger scale, or I would have transitioned into doing what I'm not doing now, which is actually buying the land and improving it and selling it. But for sure,
Right.
if I had known at that point, I would have gone directly into it.
Right. So now, what is the average budget for a deal that you do? Like, what numbers are we
Um,
talking about? And you don't
the,
have to go into breakout, but like, like the average parcel an hour away from a big city costs what? $1 million, $2 million, half a million?
Well, the most we've ever spent was 2.7 million.
Okay.
So usually there's several $100,000.
Okay.
And I think we've got another one at 1.something million. So we bought 3,000 acres so far, and we've sold half or more of those. The others are in the process of being sold.
Usually, now, how do you sell them?
That's a good question. By the way, we usually buy for $2,000 to $6,000 per acre, and we usually sell for $12,000 to $17,000 or $18,000 per acre. It kind of depends on where, like the location, and also the topography of that particular ranchette.
Right.
Different factors.
Right. So $2,000 to $6,000, and you put $1,500 per acre in place. So, and then you sell from 12 to 16. Well, these are healthy margins. They're good. Pretty good.
We have a lot of staff too, right? And you've mentioned this on one of your previous podcasts that these home flippers have a lot of overhead. Well, we've got a lot of this overhead too, because we've got a sales team.
Right.
We've got all this office staff. We've got a CFO, as an attorney, and then I've got an operations manager, and I've got an executive assistant. Like that eats into some of the margins, but the margins are still there to cover all that in profits. And this is a private equity fund. Like that's how I started structuring it a year ago, right? So now I've got to pay all the investors as well. But even like regardless of all that, like, there's still money to be made for me and my business partner, right?
Yeah, so that is a great point. So your strategy is not the strategy for somebody who runs an 8 to 5 job and basically said, let me do some land on the side. This is really more your strategy. This is a strategy for somebody who potentially is listening to this, has been doing what we're doing, or has been doing real estate at a high level already, or has been doing what we're doing and has been gotten up to a limit of what they can do, and basically say like, you know what, that might be the next step for me. And that's how I wanted to bring you on, because I loved your angle to it. I've been familiar with it. I have another friend in Houston that does the same thing. And he actually takes it to a level even further. He actually gets cable and cable television and other things in there, and he owns his own water company. And then he basically goes and rents that out to
Martin?
People. Martin? Yes, that's exactly right.
We're an EO together, Entrepreneurs Organization.
All right, wonderful. I'm with him there too.
I thought you were an EO. Okay.
Yes. So
it's funny. Yeah, I know Mark.
Yeah. So there's multiple ways that you can even skin that cat, and that you can go about that. But the bottom line is, this is if for those who are ready to really take our business model and even take it a level higher and start, instead of just flipping without touching, which is what we do, right? I haven't even seen one of our properties in 13 years, right? So we do everything right from here. But in your case, you probably go out there a couple of times.
My business partner does. I try not to.
Okay, right, makes sense. I mean, there's just dirt, right? But but at the beginning, probably you go out there once or so. But then
sometimes.
Again, for those who want to take this a level higher, this is a great model. So I like it. So you said you do this as an investment fund, private equity fund. So talk to us about that a little bit.
So basically, I was doing these deals with my money. It was basically the situation was that it's going to be my money and my bank loans to buy all the houses initially with this business partner, and then all the land. Well, I was doing that, right? So I would get 75% loans, right? And those were personally guaranteed by me, right, on my credit. And then so I was responsible for bringing the 25% down and then paying for the improvements, which were tens or sometimes hundreds of thousands of dollars. Well, after doing that for a while, and we had so many projects in play, and that the money had not come back yet, I was running out of liquid capital, right? I was getting dry on cash. And so I also at the same time and I knew the profits were huge. It was just going to take a few months for some of that to pop. At the same time, I had a lot of people in my social circle wanting to invest in these deals with me. And so I went to an attorney to see how we should structure it so that they could participate as well. And the end result was, okay, the best way is a private equity fund. And this is how they're going to get paid out. This is how you're going to get paid out. It costs $50,000 to create the fund. They're not cheap. But ultimately, it laid the framework for what we have going on right now.
And how is your currently capital stack structured? Do you if somebody puts in $100,000 with you guys, what do they get?
They get 15% per year on their money. So basically,
within which time do they get cash back out?
They start to get it right away in monthly payments, and then the sunset on the fund is after 3 years, so they get all their money back.
Okay, that's a pretty good return,
It's really
right?
good, and I set it up that it's like so high that people are skeptical. But the reason, so a lot of private equity funds, they have a 6 to 8% pref return, and then they'll do some sort of split on the back end, where maybe the sponsor is getting 20 or 30%, and the investor is getting the rest, like a huge chunk. Well, ours is set up totally differently. So you're getting a huge pref return, but you don't get as much on the back end. It's very minimal.
Right.
You get like 5 or 10% of each deal on the back end. But the idea is that you're just going to be really happy with your huge pref return. So I think it can scare some people because they think it's too good to be true. But once they understand it's not, then it's very good for just word of mouth. Everybody tells their friends about it. And I would rather everybody just be talking about the fund and the good returns they're making, and then brings more investors than me hiring someone to go out there and raise capital, or me always having to be at every meeting and trying to shake money out of people. Right?
Right. No, I absolutely agree. I mean, we do also multifamily, and our model is more of the model that you just explained on that level, with a smaller pref and a bigger piece, because the profitability of multifamily is not very high when you optimize the property. But then when you optimize it, their profitability is higher on the back end when you sell it all out. In your case, it's kind of similar, but since you got things already going, you have a very profitable cash flow stream coming in that now allows you to pay the 15%, and then you don't have to give up much at the back end, which is totally fine. You can't.
Right.
Yeah, it makes total sense.
So we're able to do a lot more deals than otherwise we would have. Like, I raised $5 million for the fund, and somewhere between 1 and 1.3 of that was mine. I'm the largest investor in the fund, and I think that helped as well. But we're able to do a lot more deals than we otherwise would have. We would just be kind of sitting on our hands waiting for some of this money to come back. When you go out and you raise several million, you can just go do more deals and make less per deal, right? Because I'm having to pay out all these investors, but when it all shakes out, it's much better.
Now, how do you look at the world right now? Are you getting into shopping mode right now?
We're not saying that the values have dropped for land for sale yet, at least with what we're looking at. Maybe you're seeing it.
No, not
Okay.
yet. But typically, it takes about 6 to 9 months after an economic correction for that level of land that we're talking about to actually also drop in value. So it's a lagging indicator we've gone through to the downturn in 2009 and 10. We're able to tell that even both demand and supply are very high for not supply, but the demand was very high for about 6 to 9 months after the market crashed in 2008, late 2008, and then sometime in 2000 and almost 10, prices started coming down.
Interesting.
And so we are right now in this time around, because the impact was so hard and so quick, we're seeing opportunities to buy cheaper, quicker, while the prices are still very high. So our margins have actually gotten bigger right now. But depending on how quickly this is being resolved, there will potentially be some tremendous buying opportunities in 6 to 12 months, or some even more tremendous buying opportunities for some of your land, probably towards the end of the year, I would expect.
Yeah, I was thinking that if we're going to buy it for cheaper, though, we're probably going to end up and sell it for less as well, right? I mean, if demand is down.
Right, unless you have the ability to buy enough that you can park it for a little bit and then take your time with developing it, because if you then come out of the development, let's say 2 years later, then by that time everything is going back up again, and now you bought cheap and you sold thing, which is basically what, if you look at 2009, the builders like the builders like Toll Brothers and D.R. Horton and those kind of guys. I know Toll Brothers raised $1 billion from their investors in 2009 and went land buying in 2010-11 when prices were rock bottom. They're only building on that land in 2000. They only started building on much of that land in 2015, 16, 17 because prices had accelerated enough that they now can basically take advantage of the super low prices they bought at and sell at the super high prices they typically sell.
Oh, that's nice. If I were to do that, though, I'd be paying out these investors and bank loans and all that all this time, and that might eat up the profits. You know, if you just have the money sitting there and you want to park it, then yeah.
That might require you to change the model for that if you see a big opportunity and go to a more split profit model, a land banking model. But I'm just sharing from experience what I've seen 12 years ago.
Our deals normally last a year to a year and a half, by the way. So we need to drag them out a little bit. You know what might be something interesting about this recession, though, is that maybe we will see there will be an increased demand for land. Okay, just with people wanting to get away from the virus, right? At the same time, a lot of people have less money. So it's like what's going to win out? Like the fact that economically they're in an inferior position, or the fact that they really want that land.
However, here's a great question, and that's a great question. However, what I found again in the 2008, 9, 10 recession is that the cheap properties, the junk stuff, the $5,000-$10,000 properties, or below $10,000 properties, particularly the below $5,000 properties, which in our metal you pick up for $200. Those wouldn't sell anymore after 2008, and for 5-6 years they didn't sell, right? So what continued selling is the $40,000-$50,000 plus things, because the people with money continued having money, and the people without money didn't have any money. And I just saw right now an article about who is most affected by coronavirus, and it's those making less than $2,500 a month, right?
You're right. They can't work from home a lot of times, right? So
they're in work and physical labor work jobs that require their presence, and so or they're in waiters and things like that. Entire Vegas, everyone there works probably under $2,500. They're all home. Now with that, the managers and supervisors are also home, but the top level of management is still managing those hotels and because the asset still has to be managed and preparing for the reopening and so on. So bottom line is, what we found is that the really interesting good properties continued selling really well because the people with money continued having money. And the first part of your comment is 100% true. It's already shown. There's been already a huge spike in interest in rural property just in the last month. So it's definitely something that is happening right now.
I've seen it even with a couple of Facebook friends just longing for like rural land. I'm like, okay. It's good to know, right? I'm sure it's not just those two people in the world, right? That are
people are sick and tired of being sick and tired in their places, and they want to just roam around and have bonfires and feel free again instead of just feeling contained. So
What about question for you? During the last recession, you said some of these lower end properties, rural land, were not selling as well. What if you were to sell those on owner financing? Would that overcome the fact that there was less demand for them?
For those below $5,000, not even that. Even in an economic downturn, what always happens is there's a shift towards seller financing. So you'll see a lot more of your properties also being selling for owner financing coming up very soon, because people do have money during those times. Not everyone, but the 80% have money. They're just choosing to spend that money more carefully and not plunk it all down on a ranchette, but instead plunk down 20% and monthly payments. And once they feel economically safe again, they'll pay it off. So what happens is in 2009, 10, 11, we got lots and lots of seller financing deals happening. But then in 2012, 13, 14, they're all sold out. They all paid off. Because they're like, okay, we got our jobs back. Everything looks good again. Okay, I don't want to carry that loan at 12%. Let me pay it off.
Yeah.
Right? So they paid it off very quickly, and which is all good because it's more cash in the bank, right? So I wasn't ever afraid of that. Never be sad.
And then you can redeploy it for sure. I do like when they pay them off.
All right, man. So love how this turned out. Love that we went from your technique into more like an exchange of experience in the land area and what happens in a recession. So how can people find out more about you if they want to invest with you or something like that? How can they find out more about you?
Well, I send out a newsletter every few weeks. It's more of an update to all the investors in the fund, and I can include you on that email if you would like. Just shoot me an email, Doug@HawthorneFunds.com.
Okay.
It's Doug@Hawthorne with an E, funds.com, or go to HawthorneFunds.com just to check out what we're doing. There's a lot of pictures of properties and stuff like that.
All right. So
I'm not raising money. Yeah, go ahead.
I will put that into the show notes, but you said you're not raising money?
No, because I raised that $5 million and we're just deploying it. And so, but I will raise money again at some point. So if you want to actually like follow along to see what's going on, so that when I am raising money, you'll be educated and be able to make it.
That's perfect. Yes, do that. That's great. And again, Doug is a great guy. We know him. I know him for many years, and love that he speaks Spanish now too. And
that was a son of a gun to learn. I mean,
I bet.
Yeah, as an adult. But yeah, have you spent much time over in Spain?
I have spent half a year in Spain, living there when I was in my early 20s. And then I've spent quite a few vacations over there. Yes.
Okay, yeah. Imagine from Germany, it's like probably a common spot to vacation,
Yes.
right?
Yeah. I lived there, then I worked there, then an internship there, and as a child lived in Argentina too, so that's why I
Wow,
speak
that's
Spanish.
awesome.
So, and I'm married to a lady from Honduras, Central America, and her mom lives with us, so she only speaks Spanish, so we have lots of Spanish going on in the house.
Yeah. So, are you always practicing, or you feel like you're like?
No, I speak probably a good half an hour to an hour Spanish a day, but just around the house.
Mhm. Yeah, well, good. I do that. I have rules with certain employees if they're Hispanic or speak Spanish that we only can speak in Spanish. So
Okay, that's
you
awesome.
have to stay on it.
All right, so we had the cleaning ladies today. They only speak Spanish. So it's like, hey, come over, please come over here. Can you look at this? Can you look at that? It's all in Spanish. So
That's great.
with that said, guys, thank you very much. Hey, we'll put the information about how to get in contact with Doug into the show notes, how to follow along with what he does. I loved it. I love the idea of going into that. Last question. How did you come up with that model?
Because my business partner said that he found a deal outside of town, some land selling for a lot cheaper than it should have been maybe selling for. And he had the idea to maybe carve it up and sell it. We sold those I think 30 or 40 acres at a time, and the margins were still good. And then eventually we realized we could go all the way down to 10. And the smaller parcels you have, usually the higher price per acre.
Higher price per acre, yeah.
We started doing that, and yeah, it was just started with that one experiment.
All right, very nice. That's all it sometimes takes. You stumble into your luck. You stumble, and if you keep your mind open and you have the ability and the knowledge and the preparation to try certain things, then all of a sudden this could become your next thing. Perhaps you have listened to this podcast for the very first time, and you stumbled into this, never thought land flipping would be interesting. Contact us. You know where to get a hold of us, right? landprofitgenerator.com. Go to our Facebook group, Land Profit Generator, Real Estate Investing. And with that said, thank you very much. That's a wrap. Thank you, Doug.
All right. Thank you, Jack.
Enjoyed this episode? Then make sure you like, subscribe, and post your comments and questions below the video. We're looking forward to hearing from you.